Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius and Anucauskas. Today's the 28th of January 2020. So, yep, welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, now then, before we jump in, quick mention of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yep, feel free to visit us here for our daily analysis or separate trading technical analysis here. So yep, basically guys, I believe you can find a lot of useful stuff for yourselves. But for now, let's jump into the charts. Now the first one I want to touch on here is the Nikkei225 index. So looking at this one, and I've talked about Nikkei last week, where I was telling you guys to keep a close eye on some of these upside lines. So basically, I was telling you guys to keep a close eye on this medium-term upside line. A bit of a tentative one, but nevertheless, you can see how well this one played out. And of course, the slightly shorter-term one, or actually, it's also a medium-term upside line. But this one is taken from the low of the 10th of October. Now, basically, initially we got a break through the longer one, and we saw this one drifting further south. We saw the index opening with a huge gap to the downside here on Monday. And yep, it continued to drift lower, and today we saw the index again opening with a downside gap, and this time below this other slightly more flat upside line taken from the low of the 10th of October. So in a way, all this kind of creates slightly a more of a bearish atmosphere, of course, given that it broke below these two upside lines, and now it seems that it's aiming for the for this key area of support near the 22,950 mark, so which is roughly near the low of the 8th of January, or in other words, the lowest point of January. So for now, if we will aim for this territory right here, and if this gets broken, well, this would not only confirm a forthcoming lower low here, but also place the price below the 200 EMA here on the 4-hour chart, and yep, further declines could be possible. So for now, guys, all eyes are on this territory. Looking at the cash index right now, we can see that the price is currently balancing around the 23,178, well, 80 zone, roughly around there, and roughly around here, basically. So yep, we'll keep an eye on that one, and in a way, like I said, it seems that there could be a chance for a drift towards this 22,950 territory. But if that fails to withhold, now this is where it could become even more exciting for even more sellers. So keep your eyes on this one. In case this suddenly travels back above this upside line, with the one that's taken from the low of the 10th of October, yes, there could be a possibility for this one maybe to drift back up here. But ideally, probably we'll keep an eye on the 23,750 zone, 50-55 mark. If we get a push above this, this would also place the price above all of its EMAs on the 4-hour chart, and in a way could increase the chances of a potential drift higher. But again, there are some key obstacles to overcome, and of course the main one being this high, the January high near the 24,116 mark. So for now, keep your eyes on these two highlighted areas, and let's see which way this is going to break out. through, but we are leaning more towards the downside, and especially if we get a drop below the 22,950 zone. So keep your eyes on that one. Dow Jones Industrial Average. Now this one is on a slide as well, and looking at the cash index right now, we can see that the price is balancing roughly around the 28,650 territory. So basically slightly above the yesterday's close, but still below this medium-term upside support line taken from the low the 3rd of October. So basically this is why it's still looking more bearish than bullish. For us to consider the upside again, well, we would like to see a move back at least above the 29,005 area, roughly around there, guys. So basically if we do get a push above this one, then yes, we will aim for the previous all-time high, or I should actually say the current all-time high, which is roughly around the 29,373 zone. And then if it gets broken, then yes, we could see a further move higher. With that said, that's of course in the scenario if we get a strong move back above this medium-term upside line and a push back above the 29,005. For now, nothing is really leaning towards that scenario for now, given that the price is still balancing below this medium-term upside line. Everything's kind of leaning more towards the downside. But what you could do here is keep your eyes on one of these key areas of support here, and that's roughly around the 28,000. And let me just quickly mark this one first. There we go. So that's roughly near the 28,400 zone. So in a way, if we get a drop below this one, this could also place, or I should say, would also place the price below the 100 EMA here on the 4-hour chart, and in a way, more sellers could see this as an opportunity to step in and drive this one lower, maybe even towards the 200 EMA, and then of course if it does move towards that area, then we'll take it from there. For now, we'll be very careful here. Yes, we did get a bit of a rebound, but we're not far from this 28,400 zone. If we get a drop below this, then well, this could open the path towards slightly lower areas, and this is where we will aim for that psychological 28,000 zone or the 200 EMA on the 4-hour chart. So guys, keep your eyes on this one, and let me just actually quickly put an arrow here for our future reference, just kind of for the sake of it, and so that we would have something here indicating that what we were talking about. Now jumping into a few pairs now very quickly. AUDCAD, now it is at a very interesting spot right now. So of course, as you can see, the Australian dollar is on the weaker side, and but as you can see, the pair continues to balance above this key area of support near the 0.8896 zone. It did drift, did have an overshoot a little bit. It did travel a little bit lower, tested the 0.8888 zone, from which it kind of rebounded and is now back above this the low of the 7th of January near the 0.8896. So let's see if this territory can hold. If it can, then we may see a bit of a rebound here and a push maybe back to the upside, but to be honest, given the current weakness in the Australian dollar, that's why there is well, there are a few interesting spots here underneath where to aim for. So one of the main ones to keep an eye on, let me just quickly zoom this one in a little bit and put this one on the chart. So the first one we'll aim for will be the 0.8875. Now I do understand it's only about 13 points away from the potential breakout point, but still keep your eyes on that one. That's, like I said, that's the low of the 16th of October. And yep, if that gets broken, then well, the path towards the lowest point of October could be open, and that's roughly around the 0.8830 zone. So long story short, basically keep your eyes on the 0.8888 zone. If we get a drop below that, then well, further declines could be possible, and like I said, one of our main targets that we're going to be aiming for will be the 0.8830 zone, and then we'll take it from there. in order for us to, let's say, get excited about the upside. Now, of course, we could keep an eye on this little area right here near the 0.8925 zone, but to be honest, we would prefer a push back above this little zone right here near the 0.90 zone, so the nice psychological 0.90 area. If we get a push above that, back above that, then yes, we will aim for some higher levels. But again, for now, it seems that the upside could be slightly off the table. So all eyes are on this little area of support right here. And let me just quickly highlight that for our future reference. And yep. So we'll keep an eye on this one, because if we get a drop below this, this would confirm forthcoming lower low, and as I said, we will aim for the lowest point of October. Now then, guys, I hope you can hear me and see me okay, because it seems that I'm having a few issues here with the stream, but hopefully everything's running nicely and smoothly. But basically, getting back to the charts, NZDCAD now, a similar story with the AUDCAD. Just wanted to quickly update you on the kind of this nice setup that we're having here. And basically, for now, we're also keeping a close eye on this little area of support. And let me just zoom in very quickly here. So this 0.8599 zone, or in a way we could actually round it up towards the 0.86 zone. So in other words, if we get a nice drop below the 0.86 territory, then, well, I mean, further declines could be possible here. And yep, we will aim for areas like the 0.8581 zone, which is the low of the 5th of December, or even going further, we could target the 0.8514 mark, which is the low of the 29th of November. So for now, guys, long story short, all eyes are on this area of support. Let's see if it actually can hold. If it cannot, then, well, this is where it could become even more interesting for the sellers. So keep your eyes on this one. In terms of the upside, of course, ideally we would prefer to see a push above this barrier right here, the 0.87 zone, but again, we don't want to miss out on any potential moves, so we'll start considering the upside if we get a push back above the 0.8658 zone, which is marked by the high of the 27th of January, and then yes, yes, we could aim for this 0.87 zone. So if we do get a push above the 0.8658, then this would also place the rate above all of its EMAs on the 4-hour chart, and that's why, like I said, more buyers could see this as an opportunity to step in. So, but again, for now, everything's kind of leaning more towards the downside. Let's see if this area can hold. NZDUSD, this leads us to this and to this pair, and previously I talked about this one, so I was telling you guys to keep a close eye on this medium-term upside support line taken from the low the 1st of October. You can see that we managed to break that to the downside, and now everything's kind of leaning more towards the lower areas. The only thing is the pair would need to overcome this barrier first. You can see that it did have an attempt to break it, but kind of didn't quite do that. So this area is around the 0.6518 zone, and that's also the low of the is that 11th of December. That's correct. Yes. So so yeah, keep your eyes on this one, guys. If we get a nice drop below this, then yes, further declines are possible, and well, there are a bunch of key areas of support which previously acted as resistance levels, and we'll aim for one of those, and one of which could be this one right here near the 0.6437 mark, and that's basically marked by the highs of the 21st of November and also the 29th of November. So yep, guys, keep your eyes on this one. Could be an interesting move here. For now, yes, the fact that it has broken this upside line, that is somewhat well, it is bearish, but just for that extra confirmation, wait for a drop below the 0.6518 zone, and then yep, we could aim for further declines. And let me just quickly put this one on the chart for us here, and not this one, but there is one right here. In terms of the upside, pretty straightforward. We need to see a push back above the 0.6582 zone here, and only then we will aim for some higher levels again. So keep your eyes on this one. USDCHF. Now, this one's having a nice pop here to the upside, given that the Swiss franc is the one of the weaker ones today. So the weakest one is the British pound, but looking at this picture here, you can see that USDCHF is having a nice push higher. Previously, when I looked at this one, I was telling you guys to keep a close eye on this area of support, and probably let me just jump into a daily chart for this one. There we go. So basically, you can see that the pair found some good support near this level right here, near the 0.9623 zone, roughly around there. Basically, that's the low of the 25th of September 26th of September 2018. You can see how nicely the pair rebounded from there and is now making its way back to the upside. Looking at this daily chart, you can see that it's pushing above the 21-day EMA here, and our next target could be around the 0.9762 zone, so roughly around there, and that's the high of the 10th of January. The only thing is here, the only problem here is, yes, if it pushes above the 0.9762, then yes, it could travel further north, but don't forget that the upside might get limited near this downside resistance line. That one's taken from the high of the 26th of April last year. So in a way, there is some room here for a bit of correction, and this is exactly how we would see this move higher, a bigger part of a correction. So yep, because like I said, the overall trend for now is still to the downside. So keep your eyes on this one and be very careful. And like I said, from the shorter term perspective, you could keep an eye on this area right here. And if we get a push above this, then yes, we will aim for slightly higher levels, but again, we'll be very careful just in case this suddenly finds some resistance near one of these EMAs here on the daily chart. So something to keep an eye on. In terms of the downside, pretty straightforward. We'll take a very conservative approach and wait for a drop below the, or ideally maybe a daily close below the 0.9623 before acting or considering the downside. And the last pair for this session is going to be the euro dollar. So quick mentioning of that one, and let me just jump back into a 4-hour chart. So you can see that we're finally testing the psychological 110 zone. So the big question here is, can this hold today? If it can, we may see this little rebound that I talked about this morning, where I was saying that we may see a drift first towards this 1.10 zone. If it holds, we could see a nice rebound and a push back towards the upside. The only thing is that the upside might get limited near this little very short-term tentative downside line taken from the high of the 16th of January. And if it holds, then we could see another round of selling, which potentially could lead towards the low of the 29th of November near the 1.0980. For now, all eyes are on the 1.10 zone. If it holds, then yep, that's wonderful. We could see a nice rebound and a push towards this downside line. If this downside line holds, then yes, another potential sell-off, well, not sell-off, but a potential drift lower. Let's put it that way. If this downside line gets broken, the rate could travel a little bit higher here to test the other slightly longer downside line here, taken from the high of the 31st of December. So although it's also a short-term one, but a slightly longer than the previous one that I talked about. So this is where we could consider a possible move towards that line. But again, for now, let's keep it short and simple. All eyes are on the 1.10. If it holds, we could see a nice rebound back to the upside a little bit here for a bit of correction. But if it breaks, we will keep an eye on the 1.0980, because that's the kind of a nice area for the bulls to step in and drive this one back to the upside. But again, like I said, for now, all eyes are on the 1.10. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me tomorrow morning, as always, at my Trader's Espresso, that's 7 o'clock GMT time. For now, I hope you have a beautiful evening, and I'll see you later. Thank you very much, and bye-bye.